I'm Daniel, an 8-year veteran prop trader helping beginners master FX trading. I run a paid trading community called Trading Lab. For more details, please check the description below this video. Today I'll cover gold technical analysis shared in Trading Lab. I'll walk you through some of that analysis in detail today. Here's my 1-hour chart view, short-term bias first. My bias has flipped. I'm leaning bearish on gold for today's session. I'll walk you through the full detailed breakdown right after this. So first, the overall directional bias here is pointing downward, and looking at recent short-term price action, we're in a situation where bounces are likely before forming a lower high and dropping again, so that is the overall bearish scenario we are expecting here. Just keep that risk factor in mind. As you follow along with this analysis, let's go ahead and walk through the full breakdown. So for gold, the prior daily candle has officially closed on the key level, and it closed at nearly the same level as the prior rest candle. So the next candle broke out above that small prior doji to the upside. That candle confirmed a clear breakout above the prior resistance level. So today, Daniel is shifting his overall bias to a bearish downside view. Also, looking one candle further back, we can see this large bearish doji candle here. If price breaks out higher today, the specific target level is $46.38. If this level breaks and the bearish candle body confirms, expect a pullback from here. We could see price come up to test this resistance zone. To give you the specific levels, this consolidation zone sits right around the $4,500 mark. Of course, bearish momentum is currently driving price lower. If a pullback high forms early, the bearish setup stays very strong. Today's pullback could realistically push gold all the way down to $4,500. Now the gray zone shown on this chart marks a horizontal range. If you've already seen my previous video, this will be familiar. You can see the range has widened, reflecting the recent downward price swing. With that in mind, I've also adjusted the gray zone range width. So please keep that in mind. We have two key reference candles here. Those two candles and the area around the $4,500 level are our key zones, using these two candles to map out the full horizontal range width. That covers the cooling phase analysis I walked you through earlier. Whether today closes below 46.38 or pushes all the way down to 4,500 today. So those are the two key price levels Daniel is watching right now. Now let's take a closer look at the 1-hour chart monitoring setup Daniel uses. At that point, Daniel shared this analysis with Trading Lab members. The content covered the 5 key points Daniel will explain next. The full breakdown is exclusive to Trading Lab members only. Let me quickly cover the key points for now, starting with the current. The market environment shows price action currently forming a sideways consolidation range. Outside of that, there is very little tradable information or pattern to act on. That was the key point Daniel was making about each individual candle's move. Looking at it more broadly, we could cover a lot more information, but in practice, when structuring trades, the key factor is the horizontal range. I explained that this is the only truly useful element to focus on in your analysis. This covers the market recap from 2 days ago, which Daniel shared during that session. First, these two candles formed the base of a horizontal consolidation range. After that, a breakout occurred in both directions on the chart. When we examine the shape of each candle and its position on the chart, this is clearly not the kind of candle that leads to a downtrend. Right now, a new ranging market is forming once again on the chart. The baseline candle here is this single key doji line acting as our reference. So with that as our base, today's strategy is to trade the breakout of this candle. We should wait for a pullback in that direction before entering. That was the scenario Daniel laid out in yesterday's market analysis. When price broke downward, the candle right here was the key move to watch. Without fully negating that move, this reversal candle was a key pivot. After that, strong bullish momentum formed, pushing price sharply higher. If price formed something like a bull flag without negating the structure, it ended up breaking out above that channel line. I had mentioned I was expecting that kind of price formation the day before. This was the key doji candle acting as my base level reference. It broke out to the downside, then pulled back during early Tokyo session hours. Regarding this price action pattern, it shows a short-term pullback move. This is a pattern Daniel has explained many times in his analysis. After the pullback forms, expect a follow-through move to the downside. Looking at the price range here, This ties back to the previous day's candle. From the doji high, that entry wasn't quite fair though. Let's think about where shorts could be triggered from this setup. From the recent high down to today's London session low is the range. That's a drop of roughly $133, which works out to approximately 136 pips in total. So this doji-centered scenario has played out correctly. We've been blessed with some solid volatility for the first time in a while. So the market has been moving in a really comfortable and favorable direction lately. Today's content for Trading Lab members covers what comes next in the market. I'll walk through the detailed scenario analysis for you. Also, from yesterday's horizontal range breakout to the most recent low formation. The specific price range within that zone was also fully calculable. With that context, let me walk you through yesterday's market recap. For today, the overall trend remains bearish, but watch for a potential rebound ahead. That wraps up today's gold market analysis.